Will the NASDAQ rebalance matter? Here's what you need to know before the bell. So today is the NASDAQ rebalance. This is that rebalance that everybody's been talking about now for the last couple of weeks, where the NASDAQ will take the top 10 stocks and reduce their weightings in the index and then rebalance the rest of the index back to the new weightings. Expectations are this was supposed to cause a very big decline in the markets because today all of the index funds have to rebalance all at the same time. So theoretically, that should induce a lot of selling at the top of the stocks. People were saying, well, that's going to create a big decline in the NASDAQ when that occurs. But it doesn't seem to really be the case, as I've talked about for the last couple of days. The NASDAQ rebalance will probably be pretty much a nothing burger when this is all said and done, because yes, they are taking weighting out of the top 10 stocks in the index, but they're also adding it to the bottom 90 stocks in the index as well. Again, we did see a bit of a correction last week in the NASDAQ, a bit coming down towards that 20-day moving average. Again, there's a lot of reason here to expect a bigger correction. The market is extremely deviated above its 200-day moving average. These extreme deviations tend not to last for an extremely long time. You're going to get a correction probably in the next month or so. To some degree, we are kind of picking up a really short-term kind of sell signal here on the NASDAQ. We have seen money rotating out of NASDAQ stocks into other areas of the market. The market breadth has broadened, but most likely this NASDAQ rebalance today is not going to mean a lot to the overall market. It'll probably be one of those things that the markets have been well aware of it. They've already been kind of bracing for this and preparing for it for the last week. That's when we saw some selling pressure by institutional managers and others earlier in the week, last week. That has likely mostly been taken care of. We could see a bit of volatility today, so don't be surprising. But again, overall, this is not going to be the big event that everybody is expecting it to be. The one thing to keep a watch on, though, and again, as I said earlier, is that these deviations from long-term means are very important, and they do tend to lead to corrections. When you had previous extensions to that degree, you did have an eventual reversion to that 200-day moving average. That is eventually going to occur again. The question is when, of course, and what causes it. It really doesn't have to be any type of major issue, just a realization that earnings and prices are too far deviated from each other, and those have to rebalance at some point in the economy. But overall, keep a watch on markets here. We are very extended. We are in the middle of earnings season, which is giving a bid to stocks currently. But when we get into August and September, which tend to be weaker months of the year, I would expect an ability to have a bit more of a correction here to provide a better entry point to add exposure to your portfolio. I'm your host, Lance Roberts, and of course, that is what you need to know before the bell.